All right, hello, and welcome to Camel Finance. I'm your boy Camel, and just yesterday I was saying that we had a lot of weird price action that didn't really make sense. We had like the Nasdaq running, and we had the Dow coming off, and we had the S&P not really confirming a cycle. We had Bitcoin being weird, but in just one session, I often say this: things can change, and they can change quickly, and they are starting to change by the looks of things, and they are starting to improve. So I'm excited to show you the charts today. I'm looking forward to showing you the charts. And as always, sit back, relax, hit that like button, and let's get into this. I was saying in a video a few days ago that Tether, the company behind the dollar stablecoin USDT, had an enormous exposure to US Treasury bills. And whilst this is supposed to be the risk-free rate, it's anything but risk-free at the moment. With the US currently discussing a debt ceiling issue, the risk of default is non-zero, right? This is not risk-free. Now, I said before, I don't really think the risk of default is that high at this stage. We can talk about a controlled demolition or something if we get there. But for now, I think they're going to do what they always do, which is raise the debt ceiling and carry on kicking the can down the road. I made that quite clear at the time. But what I did say was that if I was Tether, I would want to be de-risking my exposure to treasury bills and hedging that risk by using something like Bitcoin, by increasing my exposure to Bitcoin. And the reason for this is Bitcoin, of course, functions as the CDS, the credit default swap, or said another way, the insurance against US default. It also serves as insurance against dollar collapse and, of course, all other fiat currencies and central banks around the world as well. If the US was to default on its debt, then I would expect nothing more than to see Bitcoin absolutely skyrocket. And so I said, I wonder how long before we see Tether start to increase exposure to Bitcoin? And the answer was just a couple of days. They have announced they are indeed going to de-risk their treasury bill exposure by increasing exposure to Bitcoin. Now, they didn't come out and say this directly, that they want to decrease their treasury bill risk, but we all know that is really what they're thinking, right? Tether announced that they are going to regularly allocate up to 15% of its net realized operating profits towards purchasing Bitcoin. And these Bitcoins should be considered on top of the minimum reserve assets that 100% back Tether tokens. So they are not going to be backing their dollar stablecoin with Bitcoin. Instead, they're just going to be accumulating Bitcoin on top of maintaining their backing, i.e., they are going to decrease the T-bill risk by increasing exposure to Bitcoin. So what does this look like? What does this look like in the real world? Well, Tether made $1.48 billion in net income just last quarter. So that's just under $500 million per month in income. And yet for some reason, Tether FUD still circulates. People still claim this thing's unbacked as if they have any reason to be malicious. What a business model. There's only like 12 or less employees at the company. They all get to share this massive amount of profit for doing no work. People give them their money. They give you a stable coin in exchange, and then they take that money that you just gave them and they invest it in short-term treasuries and alike. As you can see from here, then they just sit back and collect the yield. Thank you for playing. And if at some point you want to exchange back to the dollar, well, of course, no problem, because they're making $500 million a month from doing absolutely nothing. Anyway, so they've told us they plan on investing 15% of net operating profits into Bitcoin, which of course, 15% of 500 million. This is $74 million of Bitcoin, or said another way, 2,780 Bitcoin at the current market price every single month. Now remember, only 900 Bitcoin a month are even mined. So they are about to buy more than 3 times the amount that's even being mined. They're about to buy 3 times the total supply coming out of the miners. So miner fees at the moment, they're coming back down to reality, which is good to see. There was a lot of worry that the whole ordinal thing, the building meme coins on Bitcoin thing, was going to be a problem. But as you can see, particularly if I zoom in here, let me zoom in for you. As you can see, big spike, right? Ridiculous prices. And then we drop back down, and we're not that far from historical ranges. So we do need to come down a bit. You can see we've dropped from a whopping over $30 a transaction to around $4 a transaction. This is going to continue to come down. As I said before, it's really expensive to attack the Bitcoin blockchain, and you're just never going to get anywhere with it. There'll be some people that say, well, it wasn't an attack, it's just people building meme coins. Yeah, that's possible. I view this as a DDoS attack that just simply didn't work. And I say that for 2 reasons. One is that the attackers, let's call them that, could have taken up less block space, but they chose not to. They chose to deliberately pay more for more block space. And secondly, many of the transactions, in fact, almost all of them that we saw on chain, were of the exact same size, which is the sort of thing you'd expect to see from a DDoS attack. If it was organic and normal activity, then of course you would not get hundreds and hundreds and hundreds of transactions, all of the exact same size which to me speaks to spamming the network. It speaks to a DDoS attack. But what an expensive way to waste money, right? What an expensive way to just slow this thing down for a few days. And now you can already see they've completely run out of money. So Bitcoin continues to do Bitcoin things. Bitcoin continues to shake off any attacks and prove that it is the hardest form of currency on the planet. Remember, where there's a will, there's a way. And you can even send Bitcoin without internet access. So as you can see, you just type in a few numbers, ping it over SMS, and there's your message. So what a time to be alive. Despite the price fluctuations, which can often be wild, this is a very volatile asset, remember. But despite all of that, the Bitcoin network itself has been steadily growing every single year. As you can see, the trend is up and to the right. And if we smooth out the noise with a 50-day moving average, this is what it looks like. Active addresses continue to move up. The network, the protocol continues to be adopted. And lastly, before we get into the charts, Miles here has been pointing this out. Look, the hodl wave is set up for all-time highs. We're just waiting for this to roll over. Whenever that's happened historically, very, very good things have happened to the price of Bitcoin walking forward. A Fed pause is likely just coming up in June. We're likely not far away from a Fed pause, remember, and I've been saying over and over again, markets will front run the pause in rate hikes. The monthly MACD looking to flip bullish, and the MAs here and here are just about set to cross right below price. So all of this speaks to bullishness, doesn't it? I know there's a lot of people out there that still champion this idea of let's look left and see what the price did last time. And of course, last time the price kind of based into the halving, did this, maybe even retest the lows. And then we get to the halving and it skyrockets and goes parabolic. But I just think that's been too easy. Now I'm open to being proven wrong on this. I've said this multiple times on this channel. If we start to base here, if we start to come down and retest the lows, then I'll say fine. Then we'll just look this way. Right, we'll look to the left and we'll say, what did we do last time? Well, we did this and this, and then we went like that. So then we know what's going to happen after that, right? We know what's going to happen. But I just think that's too easy. I think the way you upset the most amount of market participants is to blow this thing off in a big parabolic advance and then spend 3 years trending down, leaving everyone that is so sure of themselves that this cycle is going to repeat just like it always has done historically, holding the bag and expecting to see a big recovery out of here, but it just won't happen. That's how I see it. Now, again, open to being proven wrong, open to all outcomes. But if we start to get really parabolic over the next couple of months, which is my primary expectation, then expect me to offload somewhere in this neighborhood, expecting a 3-year bear market for Bitcoin. Again, open to being proven wrong. If we start to base here, if we start to retest the lows before we go, then I will just say I was completely wrong about that, and that's fine. I'd rather this happen. Let me be clear. I would rather we do a repeat. And this is for 2 reasons. One, we have seen 3 of these before. How easy will it be if this cycle repeats? We'll know exactly what to look for. We'll know exactly what to look for. I've traded through multiple of these. This is going to be easy, real easy money if this cycle repeats. That's what I want. The other reason is that the longer this cycle goes on, the higher the peak is going to come. I would much rather ride this thing up all the way for the next few years and get a $300,000, $400,000, $500,000 Bitcoin price. If we do what I think we're going to do, which is just blow off from here, then we're going to top much, much lower, likely around 100 to 130K. So I would much rather take it slow, take it steady, look left, see what we've done before, and ride this thing all the way up to bigger numbers. But that's just not how I see it. Again, as I always say, one day at a time, open to all outcomes. But at the moment, this is my expectation. So with all that said, here's the dollar. Look, continues to fit my little green squiggle so well, you can't even see the candlesticks. But we're currently sat at around 103. And I do think this thing's going to be contained underneath 104. Break out above this, and I'll start to shift my narrative. I'll start to shift my posturing, and I'll start to expect this to pressure risk. But all the while we do something like this and roll over, then I have no problem sticking to the plan for now, at least. Here's Bitcoin. Bitcoin is starting to look a little bit like this was a cycle now. It's starting to look a little bit more like this was indeed a cycle low. So it's taking its time. Maybe we're going to do something like this. For now, though, given where we are, given we've had what I believe is a day 63 cycle low, there's nothing more I can do. I just have to put the position on, take the trade. We waited patiently all the way from here. So is this going to do what I think it's going to do? What the cycle suggests it will do, which is move up into the next cycle low. That's what I expect given where the cycle is. Obviously, we have our invalidation. If we roll over and take out that low, then we'll have to move to plan B. We'll have to switch posturing, and we'll have to pay some stops. But for now, long and strong, continue to push. The same's true of Ethereum, isn't it? Look, right around back to break even out of this cycle low. So happy days there. We've got relative strength from the crypto-related equities. So Coinbase, as you can see, kind of hanging around break even. But the relative strength has shown up in MicroStrategy, as you can see now. So we're in a little bit of profit there. Riot as well, as you can see, relative strength has shown up on this second position, still holding all of these first positions from the original entries. And here's Marathon. Again, relative strength here compared to Bitcoin. So maybe these things know something. They seem to know ahead of time when they did not set lower lows, when they set equal lows. I was saying that they seem to know ahead of time that a Bitcoin cycle low was coming, because we had Bitcoin come down and set lower lows whilst the crypto related equities were setting equal lows, right? And I said at the time, this is relative strength. I wonder what they know. And so far, they seem to be continuing this theme of relative strength. So maybe they know that Bitcoin follow through is indeed coming in the near future. I see this little pump is getting people excited about XRP on Twitter. I am still sticking with this idea that we're going to have this big flush before we can go break out of this downward sloping red resistance line, and you'll see me add along. But I just don't think that's going to happen. I think we've got to upset a bunch more people first, and then down here, I believe, is going to be one of the trades of the year. Speaking of trades of the year, I've been saying this on and off for a while. I will continue to. I believe the VIX is still working on a breakdown. What's really interesting here, I don't use a weekly chart very often. In fact, I hardly ever use anything other than the daily chart. But if we grab a weekly chart and we connect these from back here, you can see that connecting at the bottom of this, we are right at the last final point of support. And if I click back into our daily chart and reset this so we can see what's going on, you can see that if we lose these local lows that we set just recently, that is going to open up a big drop, which is exactly what I'd expect to see during this melt up. If you're not familiar with this melt up, let's just quickly click into this melt up chart. So here's the melt up chart. If you're not familiar with it, just a quick introduction. I believed we are going to see this melt up. I was calling for this back in the summer of last year. There's been times when it's looked genius. There's been times when it has looked absurd. Right now, we are just about to, I believe, break above these local highs and start the final blow off portion of this move. So is this going to happen? Are the markets indeed going to front run this pause in rate hikes like I've been saying all along? Is Congress going to be banned from owning stocks at the top? And is that, coupled with a rate cut cycle, going to be the catalyst to tank markets? Because if this is going to play out, and that's what the VIX is suggesting, isn't it? If the VIX is going to continue to bleed down lower, then what's going to happen to stocks? Stocks are going to continue to rally. We're already seeing this in the NASDAQ, as you can see. The NASDAQ continues to just be an absolute beast. Once we get above these highs, and I do expect some level of rejection initially here, but if we can get above these highs, and you can't be bearish anymore. If the chart continues to do something like this, have a pullback, and then go again and break out, how can you be a bear at this point here? If the market starts to rally up at this point, but beyond a breakout above here, how could you possibly be bearish anymore? Everyone that is bearish and has been permanently bearish all the way through all of these lows and all of this massive rally from the NASDAQ, all of those bears will have to capitulate. We're almost at that level. So, like I said, if the VIX can continue to break down, expect to see the markets continue to melt up, expect to see this blow off top unfold. And when we eventually get down here, I will become the biggest bear on planet Earth. You will see me looking to long the VIX from down here up to 3 figures. And I believe this will be one of the trades of the year as well. Here's a Dow Jones. So stops move up to break even because we've got to manage risk, right? We've been in this trade for a while. We definitely want to take a loss having sat through all of this. But so far, sitting around a double bottom, looking to break out of this today. So if we can do that and it can push off of here, then I think the stock can come up below these lows as well. And then we'll just try our best to ride this market for all we can. NASDAQ, I kind of half covered this, and there's nothing more to say, is there? Long and strong continue to push. Some level of rejection at these highs from back here is perfectly to be expected, and we're almost there. And as long as we're above this red upward sloping support line, then there's no reason to exit this trade. It's the exact same strategy for Apple, isn't it? So all the while we're above this blue upward sloping support line, it's reasonable to expect Apple to continue higher. Lose that level, however, on a daily closing basis, and you will see me exit the trade. Did I cover the S&P 500? I'm not sure if I did or didn't. I know I looked at the SPY chart, but anyway, here it is. So if we can break out above here, we've got a new cycle in play, and that tells us to be open to seeing a big pump up here before we drop into our next daily cycle low. As ever, one day at a time, but so far, I think things are starting to improve. Everything's starting to look much better. So I'm your boy Camel. If you found value here today, I'd appreciate it if you could drop a like on the video. Make sure you subscribe and turn the notification bell on if you want to continue to get updates on all these markets and how I handle them in real time as a pro swing trader, as well as free trade setups and signals called out for you well in advance. In the meantime, enjoy the rest of your week. Take care from me. All the best. Cheers. Bye.